Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report and it is wrong. What are you doing about it? Credit Sanitizer has these solutions for you. Pros and cons of leveraging your home equity for financing. If you're a homeowner who needs to borrow money, tapping into your home equity is a common strategy that can help you accomplish your goal. Yet, before you fill out an application for a home equity loan or line of credit, it's important to do your research. Not only should you understand how this type of financing works, but you'll also want a clear overview of the pros and cons of this type of credit before you put your home on the line. What is home equity financing? When you borrow money from a lender, you can choose between two types of financing, secured and unsecured. With unsecured financing, you don't need to back the loan, credit card, or line of credit with any type of asset. But if you open any type of secured credit, the lender will ask you to pledge an asset called collateral that it can seize should you fail to repay your credit obligation as promised. Home equity financing falls into the category of secured credit. Two common types of home equity financing are home equity loans and home equity lines of credit, also known as HELOCs. With both financing options, a portion of the equity in your home serves as collateral for the money you borrow from a lender. Home equity is the difference between the value of your home and the amount you owe on your mortgage. So if you owe $100,000 to your mortgage lender, but your home is worth $250,000, you have $150,000 worth of equity in your property. Some lenders may let you borrow up to 85%, some goes 90% of your home's value with a home equity loan or home equity line of credit, HELOC, including your primary mortgage. It's called a cumulative loan to value, depending on your FICO scores and other factors. Pros and cons of home equity financing. As with any type of financing, there are benefits and drawbacks to leveraging your home equity to access credit. It's important to consider all the ways, positive and negative, that home equity-based financing could impact you before you decide if this type of financing makes sense for you. Pros: competitive interest rates. When you back a loan with the equity of your home, there's less risk involved for the lender. As a result, the interest rate on home equity loans and HELOCs are often lower than you'll find on other types of financing products, such as credit cards or unsecured personal loans. Keep in mind, however, that every situation is different. Your FICO score and other factors will impact the financing offers you receive. Possible tax deduction. In some cases, you may be able to deduct the interest you pay on a home equity loan or a HELOC from your taxes. However, you'll need to meet IRS requirements, including using the funds you borrow to buy, build, or substantially improve a qualified residence. There are also limitations on the amount you can deduct. If you have questions, speak with a trustworthy tax advisor. If you don't have one, call me at 800-306-1990. I'd be happy to refer you to one. If you're eligible, the potential deduction could add up to a meaningful savings on your federal tax return. Borrowing flexibility. Lenders often place few restrictions on how you can use the cash you borrow with home equity loans and HELOCs. So if you're looking for a flexible borrowing solution, home equity financing might be a good fit. Cons, the bad side. Risk of foreclosure. With home equity financing, you pledge your home as collateral to back the loan or line of credit you secure from a lender. If you're unable to repay the money you borrowed as promised, the lender could foreclose on your home to recuperate its losses. This is a significant risk that you should make sure you are 100% comfortable taking before you consider this type of financing. Fees. Every home equity loan or HELOC is different. However, it's common for lenders to charge fees. That would be closing costs, origination fees, appraisal fees, annual fees, title insurance, escrow, top of your annual percentage rate for this type of financing. Fees may be due at closing or could come out of your loan proceeds. It's important to compare multiple lenders and financing options to make sure you get the best deal available. Additional monthly payment. When you borrow against your home equity, you essentially owe a second mortgage payment on your home. This additional payment may increase your debt and could impact your household budget. Some people use home equity loans or HELOCs to consolidate high-interest credit card debt, but if you're borrowing additional money for other purposes, you should be extra cautious and make sure you can afford the new payment before you apply for financing. Bottom line, Home equity financing can be a solid and more affordable financing solution for many borrowers, but it's not a perfect fit for everyone. If you feel uncomfortable about pledging your home to your secure financing, probably better to explore other options. Give me a call at 800-306-1990. 800-306-1990. We'll chat about it. And don't forget, you look at it, maybe it's time to look and say, okay, maybe we should just do a cash out refinance. We can explore that option as well if you have needs. Cash out refinance. That's the rsr2step.com. rsr2step.com. We've talked about that in the past, getting that refinance done now, and then getting the cash out hit out of the way while rates are a little higher. And if they go down, as we anticipate, you're in position to take advantage of that later on. So throw that out there for you to take a look at. That is Your Credit Matters segment, brought to you by CreditSanitizer.com. You have a credit report. It is wrong. What are you doing about it? Credit Sanitizer has the solution.